By now, I'm sure you've heard of prop firms, and every trader starting in 2026 should do this to pass their prop firm accounts. My name is Marky, and I've been full-time trading for the last 4 years. I worked a job for 2 years, and it was a dead-end job. I genuinely couldn't move on past that point because I was making roughly around $1,500 as a part-time worker at this job. There was nothing past the finish line. It was a dead-end job that my only option was to figure a way out. And what I did is I multiplied the income that I was making. Instead of looking for another job that paid me $1,500 more, I took the $1,500 that I had and I looked for a way to multiply it to $8,000 to $10,000. And that's where I found trading, and specifically prop firms. So in this video, I'm going to be specifically focusing on how I started with prop firms and my specific strategy to pass prop firm accounts effectively. Passing an evaluation isn't the hard part, but actually staying funded is the difficult part. And I don't think I know a single trader that doesn't struggle to stay funded after passing their evaluation. So in this video, I'm going to be covering strategies that you can use to stay funded to help you with risk management. Because the truth is, funded prop firms are designed for traders to lose. That's how they can operate, by selling you a $100 account that you can make thousands on every week. The only reason that you are able to make those kind of withdrawals is because there's other traders that are failing that same exact evaluation. I know tons of beginners myself that hop into these challenges with no experience whatsoever because they're eager to make money from trading. But in this video, I'm going to be covering exactly how you can avoid being that beginner that doesn't know anything about passing prop firm accounts. So without further ado, before I hop into this video, I trade with legacy funded futures. If you guys are looking for a prop firm that is reliable and that will pay you out, I also do daily live trading for legacy funded futures. So if you want to join me every single day, it's going to be at 7 p.m. Pacific Standard Time, PST. So if you guys want to join me 7 p.m., I do daily live trading during Asia session. It's my favorite session. If you guys want to check out how I trade Asia session, I have a video titled "This Strategy During Asia Session Will Make You 10K per month." So if you guys want to take that income that you're making right now and multiply it, prop firms are your way to do that. Use code MARK at Legacy Funded Futures for a discount, and let's hop straight into this video. So the first thing that you want to evaluate when you're hopping into an evaluation that is going to evaluate you is your trading style. Now there's two types of trading styles, and I'm going to break both of those down right now. The first one's going to be scalping. So here, let's imagine a move and we run down into a high probability area. This high probability area can be an FVG, a support zone, whatever you use to trade with. Now when it taps into this area, instead of catching the full move that runs up, all that you're looking for as a scalp trader is that first tap into this zone and a rejection. When you get the rejection, rather than trying to catch this full move, you enter with a little bit more size and you close out early. This is one of my favorite styles of trading because you don't have to be in the markets for more than even an hour. When you get that high probability area that enters that zone, you get a quick rejection and you're out with the profit for the day. Versus taking the swing trader approach and aiming for the full move, you have to be a lot more skilled as a trader. You have to actually understand the overall market narrative. Versus a scalper knows that this zone is a high probability area where most of the time price reacts. Even if price then wants to go lower after tapping into this zone, the scalp trader would have already gotten out of his position. Now when it comes to swing trading, I gave you a con, but here are the pros. You don't actually have to enter with a lot of risk. Instead, you can use low risk and give yourself a bigger stop loss. When it comes to scalping, you also have to be very precise because when it taps into this zone, if you have a tight stop loss risking a little bit more, and it wicks you out but then runs in your direction, now that's when you get frustrated. That's when those psychological problems come into play. So as a swing trader, you can obviously avoid that because your stop loss is going to be looking a little bit bigger. You're factoring in for the fact that it might consolidate around this zone before running up and taking that high. As a scalp trader, you're looking for that instant reaction. You're looking for that little move. You might be getting taken out 2 or 3 times before actually catching the move that makes back your profit and lets you exit for the day. So there are pros and cons to both styles of trading, and you obviously have to learn specific strategies to be able to do one or both of these strategies. If you have joined any of my live streams, you see that I have a mix of both, where I'm looking for these scalp precise entries, but I always leave my partials running towards the full target. I always do that daily narrative analysis, figure out where it's going in the long term, but then scale down to the lower time frame and try to get in and out of my position pretty quickly. That's what I have to do on streams so that you guys don't get bored. Now, don't get me wrong, it's also a very effective strategy. So the first thing that you're going to want to do if you want to effectively pass prop firm accounts is figure out your trading style. This means whether you're going to be swing trading or scalping. So let me write that down for you guys as well. And the reason why this is important is because this is going to highly impact your decision making when it comes to using higher risk with a tighter stop loss, or when it comes to using a bigger stop loss with a smaller risk. But then you have to understand more about higher time frame narrative. Versus the scalps, you'd have to understand more about what makes a precise stop loss. What are high probability areas where the market was likely to be protected, and where you can exit at high probability areas inside of the move. It's more of like an external trading versus an internal trading, where you're trading inside of the move, not catching the full move, but just getting a little bite out of that chicken leg. The second thing that you guys are gonna have to keep track of is the rules. Now, when it comes to actually getting funded, there's typically two types of account types, and that's being paid out based on daily wins, and the second one is being paid out based on the consistency. Now, consistency is a very difficult one to understand, and I see a lot of beginners not understand how to utilize the consistency tool in general. So I wanted to show you guys like a quick example of what that meant on like the evaluation. For example, if there's a 50% consistency, a lot of people think it means you have to make a specific percent every day, but in reality, all that really means is that you have to stay under 50% of the target. So if the target's $6,000, you just have to stay under 50%. So what the consistency actually means is not that you have to make a certain percent in a day. It's going to look confusing seeing all these different percentages, but the truth is all that really means is you can't make more than $3,000 in one singular day, because over $3,000 would be over the 50% consistency, right? But if we stay under that, like 2,950, that's the most that you could possibly make 2 days in a row, and then you can make $100 on your final day, and boom, you hit the total P&L right there at $6,000, and you're underneath the consistency. 49% was the largest day's win. Most of you guys, because you think that it's a one-step evaluation, which means you hit the profit target, you move on to the funded stage. That's not how it works. Although we do have a one-day pass account type coming soon, right now at maximum you can pass it in 2 winning days. But for example, you make 1,500 and then you lose 400 and then you make 500. As long as you're staying underneath that 50% consistency. And that's going to apply until you hit that profit target of $6,000. And that's when you pass the evaluation and you move on to the funded stage. And that's the same way how the consistency rule works on the funded account. Your largest day's profit just can't make up for this certain amount of the profit target. So if your payout amount is going to be $3,000, you cannot make more than, let's say, 30% of that in one day. So let's imagine on your funded account, the consistency rule is going to be 40%, because the two different account types that I've been seeing so far on futures is daily wins and then the consistency. The daily wins are typically ranging from like $150 to $200, and then the consistency rule is somewhere around 40%. So let's just imagine you're trying to withdraw $2,000. Your largest day's profit cannot make up for 40% of $2,000. If you don't have a consistency calculator, just do the math yourself. Times 0.4, that's going to be $800. So you can't have made over $800 in one singular day in order to withdraw this $2,000 withdrawal. And as long as you stay underneath the consistency of 40%, you can take the full payout. Now, when it comes to daily wins, there's typically no limit. And that's why I would honestly prefer this option right here. $300, you can lose $100. You can then make $1,000. As long as you continue winning until you get those 5 winning days, and then you can withdraw at the end of those 5 winning days. This one's a little bit more favorable because you don't really have to do the math, although if you get good at this consistency one, it will typically pay you faster. Most of the daily wins add up to about 5 wins, versus the consistency one with about 3 winning days will get you a faster payout, but it's probably going to be a smaller payout, and you're going to have a lot more restrictions when it comes to actually getting paid. So the second thing that you guys are going to want to focus on is rules. Now, I only mentioned 2 rules that I've seen on a few different prop firms. When it comes to rules, you got to learn the depth of your prop firm, what rules they have, what restrictions they have, and this is why I trade with legacy funded futures, because their rules are the most simple and not complex. They don't have restrictions on like trading gold, for example. I stopped using a lot of prop firms when gold recently had that jolt of volatility and they just completely restricted trading gold. I was like, yep, I'm not trading with them anymore. Legacy funded futures never restricted anything. That's why I stuck with them. That's why I will continue to trade with them, because they have the simplest and easiest rules to actually understand and trade with. Other rules that are helpful to understand are like payout caps, for example. This is another reason why I trade with legacy funded futures, because on the elite account with more drawdown, you can withdraw up to $5,000 on your first payout, which is not something that you'll find on most prop prop firms. Instead, they will give you a maximum of like $2,000 a week, and that kind of stops you from making a lot more money, especially if you're a little bit down the drain, you know, trying to pass these evals, you've lost some money, and you're trying to make it back. It just makes it a little more difficult, requires you to be a little more consistent before you can make that money back. The third thing is something that most people overlook, and that's going to be the platform. Not just like specifically choosing a platform, but understanding the platform, especially as a beginner, guys. The reason why it's favorable to go with like a futures prop firm like Legacy Funded Futures is because the accounts are cheaper. It's like $100, maybe $200 max for like a larger size account with like an activation fee. A lot of people will go to a futures prop firm because it's cheaper, but not understand the platform before they like start placing their trades. And I've seen so much people blow their accounts because they just did not know how to place a stop loss on the platform that they're using. So understanding the platform is a very important thing when it comes to choosing a futures platform. You have to make sure that you understand how to place a position. So when it comes to actually placing a position, let me give you guys an example. Here we have a execution tool, right? One of the things that you can do if it's on Tradeovate is create a limit order. So I think I have to be logged into an account. Let's go into this paper trading account. It's going to be the same thing on futures. If you place this execution tool, you can right click, and there you have the limit order, right? You place buy limit order, boom. And you have your stop loss, you have your TP, right? This is a simple way to do it. Now, guys, if you're in a position that you entered manually and you don't have the option to drag it down or up, the way that you do it on futures, on most futures platforms actually, is you have to right click. And if you're buying, what you're going to do, like once you're in a buy position, is that you have to do a sell stop. So what you're going to have to place if you're doing a buy is a sell stop. Now, I'm way above where price is at, but if I was actually taking a, so let's just do a sell position so you guys can get used to it a little more easily. So if we're taking a sell position, right, we're selling right here, and I place a sell limit where the price, if it comes up into this area, it will activate a sell, right? In order to place a stop loss for this sell, I'm going to have to do a buy stop. So there you go. You can see that I have a buy stop. Now, if it gets tagged into a sell limit and continues to run higher, this will take out the position completely. Another thing that I've come across recently with people placing these positions is when we take partials. So let's imagine that we entered with 4 units initially, right? Our stop loss is going to also be 4 units. When we are entering the sell position, we're in a stop loss of 4 units. Let's imagine we do enter this trade at a good level and it starts reversing and we're up like $1,000. We want to take some partials. How do you take partials? You just press buy. So if we're in sells right here, we're going to click like a buy limit to automatically take us out of the position. It would be buy limit, but we're way above where price is at, so we can't put a buy limit. But pretty much, we would put a buy limit that would automatically take us out, or we press buy, and this would only take off 1 micro of the position that we're currently in. It would not take off a position from the stop loss. So when you take off 1 micro, automatically take off 1 micro when you click buy, you have to adjust your stop loss, because what will happen if you're in with 3 micros but your stop loss is 4 micros? Pretty much what will happen, because this is a buy stop, if it runs through this area, it will take out your 3 orders and actually enter 1 micro buy. So this is a mistake that I've seen some people make. It's a very simple and easy mistake to fix. You just have to kind of get used to the platform. And I'm showing you guys this on TradingView, but like the platform that I use for Legacy Funded Futures and all that other prop firms, they're all the same. You have to do buy stop, sell limit, buy limit. So learn how to do that. It's very easy. Just go into like demo mode on TradingView, go into demo mode on the prop firm that you're using, and mess around with it, guys. Go figure out how it works when you press buy stop, how much it takes off. It's maybe a 15-minute thing to learn. Like, you have to spend 15 minutes in the platform on demo mode to figure out how this works. If you guys can't do that, you're going to lose money. You're going to spend more money trying to trade with the cheaper futures prop firms because you're going to blow your accounts. So be sure that you guys learn the platform, learn how to do this stuff. It's a very simple mistake to fix. So number 3 is going to be platform. The 4th thing kind of goes along with the rules, because you have to like think about what specifically the account type that you are trading on allows you to do. But this is going to be risk. Now, there's a strategy with prop firms that most profitable traders actually do, is not taking their sweet time on their accounts. Now, if you're a beginner, I don't think you should even be trading a prop firm in the first place. But if you're a beginner and you're trading with a prop firm, you're not going to be able to do this. But on a profitable trader's like mindset, guys, if you can pass like 5 evaluations, let's imagine that each evaluation costs $200 max, right? $200, you spend $1,000 for 5 accounts. If you can pass all 5 accounts, so what you would typically do, because the rules, like I mentioned, have a 50% consistency. So this means you can only make maximum 50% of your profit target, which, for example, a 50K account, profit target is $3,000. So what you do is, if you can only make 1,500 maximum in a day, is you aim to pass it in 2 days. So you aim to pass it in 2 days by making 1,500, around 1,500. You can make like slightly more. That's something that people kind of mix up. It's like, oh, the 50% consistency, I should stay underneath it. Yes, you should, but if you make a little bit more, that's fine. You just have to make $5 more to pass the account. So right there is your day 1, and then on day 2 you just do the same exact thing, and you have a funded account. You spent $1,000, you made 1,500, 2 days, pass the account. Now you have a funded account. Your first payout can be $2,000 each, let's imagine. But on Legacy, by the way, you have a payout cap of $5,000. If you can get your payout within the first week, 5,000 times 5, you made $25,000, and you spent $1,000 on 5 accounts. Now you don't have to do that. I'm just saying that a lot of traders actually do this, where they spend this money, go and try to make the full 50% in one day and then 50% in the next day to get funded as soon as possible. Because think about it, if your first payout, with your max payout, is going to be $5,000 per account or $2,000 per account, for example, you're making $10,000 at the minimum, right? If you're hitting that $2,000 max payout threshold. If you spend $2,000 trying to pass the accounts 2 times, as soon as possible, but then get the funded accounts and get the payout at the end of the week, you're still making a positive $8,000 ROI, right? So as a profitable trader, if you know that you can do it, that's something that you can do, right, with your risk. However, like I said, this is not something that beginners can do. And if you're a beginner, guys, you should actually take your time. I was just giving you guys ideas, but the truth is you don't have to pass it in one day. But you guys should aim to pass it by the end of the month. So when it comes to actually risk, think about the day that you're inside of, because every trading day is going to be different. Some days you're going to be able to risk more. Other days you're going to have a pretty tight range, right? It's going to be inside of a tight range, and you want to be in and out. On those type of days, take those winning days, because if your winning day on the funded account is $150, take the winning days. You do not need to place more than 5 micros to make $150. You can make $150 winning day on 1 micro. Another strategy, guys, in terms of risk, is if you're on your first day on your prop firm account, think about it like this, guys. First day on your funded, not on your eval, on your funded. You made, because your initial drawdown is going to be $2,000, right? Max daily drawdown. It adjusts at the end of the day. So if this is the case on these prop firm accounts, what you do is when you're up, let's say $1,000 on your first day, instead of your drawdown being now $2,000 because you just got a fresh funded account, your balance is now $5,100 and the day has not closed yet. This means that now you have $3,000 to play with. And what you do is you leverage this $3,000 to place a little bit of a bigger position and have that breakthrough on your first day, where now on your first day you risk that $1,000 to make $5,500, right? Now you're in with $5,000 profit, and you can get your max payout for the week. This is typically something people do when your first day goes well and you're up $1,000. Leverage the amount that you're up to get to a further point, so it makes it easier for yourself. You can get that $2,000 payout. You still have a $3,000 buffer to use to continue doing that same exact thing. If your max daily drawdown adjusts at the end of the day and you're up on the day, use that to push further. Use that to give yourself more breathing room on your account. That's one of the biggest things that made the game change for me, is using the profit that I make. A lot of people, they're like, oh, now I'm unfunded, I made $1,000, I'm going to stop trading because that's good for the day. Yes, it's good for the day, but remember, tomorrow it's going to go back up to $2,000 end of day drawdown. So if you're up and you have the opportunity to get a bigger breakthrough, take the opportunity, get yourself much further, give yourself a bigger buffer, and walk away from the market happy. And the last and final thing is going to be allocation. The more accounts that you have, I did talk about this a little bit earlier with like the risk to return. If you bought 5 accounts, right, and even if you blew it 2 or 3 times, you'd still make more money once you get funded, get that payout. But your goal, guys, over time isn't to be high leveraging these prop firm accounts and making a ton of money on a prop firm, right, on one singular account. What you're going to have to do, what you guys should aim to do, is stack more capital so that you can take smaller wins, and across all your accounts, you're making still a ton of money. One of those things, guys, for example, it's just think about it in the lowest case scenario where you're literally just taking those $200 days. Let's imagine that you got 50K, you bought 5 of them, right? What's the most prop firms winning day? It's $200. If you get $200, 5 days to get those winning days for your payout, you now walk away with $1,000 at the end of the week, right? Now let's imagine that you took my advice and you got yourself a little buffer in each account, right? Your first day you leveraged it, you're up a little bit. So now you're at a point in your account where every single winning day will count towards a payout at the end of the week. So you get this $200 winning day on 5 of your accounts. Like legacy funded futures, they give you 90% split. You have a 90% split. You get $200 on 5 accounts. That's $5,000 every single week. 5,000 times 4. How much do you guys make at your jobs? I know for a fact you're not making $20,000 at your jobs. And you can do this from 5 accounts, which cost at legacy like $100, like $50. And when you have a good promo, you use 25% off, it'll literally come out to like $100 per account. Learn the strategy that I teach on my YouTube channel. Learn the strategy that you find yourself successful with. Guys, learn a strategy. Start with prop firms. Get yourself some capital and then move to a live account. But prop firms are the way to go, and here is your key to passing them. Stop overdoing it, guys. $200 winning days times 5 accounts lets you walk away with $1,000 every single week. And let's say you only get 90% of that, you're still making like over $15,000. Over $15,000, and that's something that you guys are already happy with, guys. I just want you guys to understand that there's a million different strategies that you can go and learn on YouTube, but there's only 5 things that you really need to know in general knowledge to actually get funded and stay funded. That's using your risk properly. Whether it means you blow through your accounts once or twice, if you can get them funded faster, you will have a payout at the end of the week that's going to make you your money back. Figure out what style of trader you are. Are you a swing trader? Are you a scalper? Learn the strategy that's suited for scalping. Learn the strategy that's suited for swing trading. Figure out the rules and build towards more allocation, because I was only talking about 5 accounts. 5 accounts, your minimum $200 winning days once you already have a buffer. Every week you're walking away with $900 across 5 of your accounts because you have a 90% profit split, and you're still making an insane amount of money. Now think about it, if you had 20 accounts, if you had 30 accounts. There's copy traders that allow you to do that. More allocation, less risk, more return down the line. It isn't all about your luck. It isn't all about your psychology. Most of this is just good mathematical reasoning into how you can actually succeed down the line. Looking at the numbers and taking advantage of the opportunities that you guys have with prop firms nowadays. If you guys are interested in getting an account with legacy funded futures, use code MARK at checkout for a discount. And with that being said, that's the end of this video. I hope you guys learned something useful. And if you guys are interested in working with me one-on-one, where I take you guys from unprofitable to profitable, or I solidify your guys' understanding of the concepts that I teach, I go live every single day. If you guys want to watch how I trade, join my free live streams. These are opportunities that people did not have, and remember that they're not designed for people to pass. Only a small amount of traders will actually pass these evaluations, and the reason why that is because there's so much impatient, greedy traders that hop into funded accounts without ever learning a strategy, without ever conquering their psychology, without even learning the platform, which is literally the most basic and simple part. So if you guys are going to get an account, make sure that you guys actually go through a profitable and high probability strategy that you guys can replicate every single day in your trading, especially when you guys have to get those 5 winning days. So with that being said, hope you guys learned something from this video. Drop a comment if you guys have any questions, and I'll catch you guys in the next video. Peace.